Now I would like to provide some country views examples, and first we will have Italy as, I would say, a typical representative of a large long-term member state of Europe, and I would therefore like to invite to the stage Claudia Mazzabotta to really present the view and the implementation of accounting directive in Italy.
Thank you very much, Peter. Thank you for everyone to be here, and let me tell everyone that I'm very pleased to be in such a distinguished company today. And I'm very pleased to be in Rome for this reason, because I will explain you what the context of Italy is. So to understand what the main challenges for Italy as it is are as far as the implementation of the new directive is concerned. Yep. Hopefully it goes. Yeah. Now, Italy, let me say, it is an old country, and we are in Rome. That's why I was saying it's very special to be here and to speak about the Italian situation, because this also concerns the way and the main challenges that my country has in order to implement the directive. Italy is a member of the European Union since its foundation, and this happened on March the 25th of 1957 with the Treaty of Rome. It is a mature economy. I can't say anything different, despite what other people may think. It is a typical Western European mature system. It is marked by an advanced financial market. It has a modern set of infrastructures, despite what people may think. And it is in the transition process between a typical industrial economy to the more financial and services-oriented economy, okay? So we are in this situation. The legislation system of Italy dates back to Roman times. It's true. It's not only the problem of a language. It's not only that my country has its capital town here. Our legislative tradition dates back to those times, okay? And this marks two basic elements. The accounting principles, the accounting rules are partially included, I say partially and then I will explain why I'm using this adverb, are partially included in the civil code, okay? So the civil code has to be modified with the rules that the legislative power in this country has in order to accept the changes and to implement the new directives, okay? And this is for every single kind of directive we may have, independently from the topic. In this case, the topic is accounting standards and the financial statements environment, okay? And we also have a national standard setter, because the technical principles of accounting are included in accounting standards, right? So we have these two things. The civil code on the one hand, and not all the technical rules are included in the civil code, but many of them are, because we come from a situation of implementation of the 4th and of the 7th directives, accounting directives. So part of the rules are in there, the basic rules are in there, some details are in there, but then the technical details are in the accounting standards. And the accounting standards are prepared by a profession-oriented body, okay? A users-oriented body, a preparers-oriented body, okay? The two things together. So, actually, even before the implementation of the 4th and of the 7th directives, the civil code in Italy contained already rules about the preparation of financial statements And we also had older, let's say, older financial accounting rules in the standards, separate from the civil law, okay? Then the implementation of the 4th and of the 7th directive came forward, and this in my country happened with the legislative decree number 127 in 1991. We were a bit late in the implementation of these directives, but they were transposed into our civil law and our civil code. Of course, when this happened, the accounting profession and the national standard setter at that time had to modify the accounting standards together with the changes in the civil law. The main points are the following. We use the historical cost convention. We have never used the fair value or the revaluation models, never. We have the historical cost convention. So the environment and the new directive will be transposed in this environment, historical cost, one of the pillars of our civil code and of our accounting standards. We know that we have to respect the matching principle, of course, but we also know that we have to respect the prudence principle. And in Italy, in the Italian tradition, the prudence principle goes a bit over the matching principle, okay? So we tend to be, traditionally speaking, against the fair value, okay? And the last point you can see on the slide, we know that we have to prepare our financial statements by using the substance of a form principle, following the economic substance of what we want to represent in our financial statements over the mere juridical form of the agreements, which are the basis of our operations. But is that really true in my country, as far as the system is concerned so far? Do we have substance over form or form over substance today? In some cases, just let me give you an example very, very quickly because I don't have much time and I don't want to abuse on your time and on the time of my colleagues here. For instance, the way we represent the finance leases in our financial statements, this does not go with the financial way of representing them. Because we are not allowed, currently, we are not allowed to account for the assets that we take, according to finance leases, in the balance sheet of the lessee, okay? So the amount, the value of the asset stays in the balance sheet and in financial statements of the lessor, okay? So someone could say, well, what are you doing? You're not respecting substance over form. But when the 4th directive was implemented in Italy, we used another device, because as we know, the notes to the accounts, we call them nota integrativa in Italian, notes to the accounts. The notes to the accounts are an integral part of the financial statements. And in Italy, we are obliged to put all the finance leases information, the most important finance leases information, into the notes to the accounts. So we can say that the financial statements as a whole respect the substance of a form, but the amounts are not in the balance sheet and they're not in the income statement. So just to give you an example of how it works here, okay? Then we had the implementation, partial or complete implementation of other directives. I'm not going into details for this, like the Fair Value Directive, the 2001 number 65, the accounts modernization, so-called accounts modernization directive, number 51 in 2003. And also we had an important, substantial update of our civil law with the legislative decree number 6 in 2003. Then there was the big bang, let's call it, a new big bang. The EU regulation number 1606 in 2002. The big bang, why? Because this regulation brought the IFRS to the stage in all the continent, well, in the European Union member states. Well, the regulation by itself just obliged, as we know, just obliged the listed groups to adopt the IFRS for consolidated accounts only. But the regulation gave many options to the member states to broaden the group of companies allowed or obliged to adopt the IFRS in the member states, within the boundaries of each member state. And Italy, curiously enough, went far beyond the basic requirements of the regulation. Why? Because they didn't give me they gave me the old slides, actually, I'm sorry. I will tell you about this. The legislative decree number 38 of 2005 obliged all the banks and financial institutions to use the IFRS in their own consolidated accounts, even if not listed. The same was for insurance companies. And more importantly, these subjects, all the listed groups, all the banks and financial institutions, and partly speaking, the insurance companies, were obliged to adopt the IFRS in their individual and separate accounts. That's the big bang. Because at this point, the individual accounts of some Italian companies were prepared according to a completely different set of standards, which allow and require, in many cases, the fair value, right? And the Italian legislator was not satisfied because it allowed non-listed groups different from banks and financial institutions and insurance groups to adopt the IFRS in the consolidated accounts and in individual and separate accounts of the companies belonging to those groups. So the number of IFRS adopters in this country increased tremendously, even though in absolute terms it is just a small minority. Okay? So we already have two different tracks. Okay? The IFRS track for individual and separate accounts. I'm not talking about the consolidated accounts now. Because consolidated accounts, paradoxically speaking, in this context are less important. Why? Because we calculate taxation and we calculate how much of the net income is distributable to shareholders. We calculate those important figures from the individual accounts. Okay? So in this country, we had also to modify the tax regulation, because taxation at that point, without these modifications in the tax law, could be calculated according to completely different sets of accounts, giving completely different results, maybe, in terms of taxable income. So the tax legislation had to be modified. This is one challenge, but in this country, we have already faced that challenge, okay? Now, let's go on. There is one important point, and this is the basic news, the big news in this country. It's in this blue rectangle here. I'm sorry, I mean, the slides are not the updated ones, but the content is the same. A very, very recent law, which was actually approved and published on the 11th of August 2014 now allows all Italian companies to adopt the IFRS in their individual accounts, no matter whether these companies are included in an IFRS group or not. Okay, so this is a paradox. I'm just bringing this paradox to this floor today, okay? So every single firm in Italy can adopt IFRS. At the same time, we have the new directive to implement, okay? So it's a paradox. There's only one category of firms which is not allowed and will not be allowed to adopt the IFRS, which is what we call the SMEs, the small and medium-sized entities. According to our article 2435 bis of our civil code, these companies measured on assets, turnover, and an average number of employees during the year, measured on these three dimensions, are not allowed to use the IFRS. So who actually is more likely to adopt the new directive in this country? At this point, we have to wonder about that. Yeah. Non-listed standalone companies, which, let me tell you, which do not have an international vocation. Because if I am a small or medium-sized company with an international vocation, even if I am small in terms of dimensions, I may like to adopt the IFRS. And I will be allowed to, okay? So another group is companies, standalone companies, which have a very limited number of shareholders, locally based, with a local trade business, okay? Companies which are not owned by investment funds will continue to adopt the civil law and the national standards, okay? So this is the point. But then, let's go back to the directive. We have to know and be aware that more than 99% of Italian firms belongs to the category of SMEs, okay? The new directive says the motto is think small first, simplification. But how can we match simplification in practical terms with the need for audit and control also on small and medium-sized entities? Small and medium-sized entities are small and medium-sized, individually speaking, but altogether they form 99.5% of all the firms in Italy, okay? Do we have to lift the control on 99.5% of our firms? First issue. Second, we have historical cost. Are we likely to adopt, and do we want to adopt a different accounting convention, such as fair value? Third, is the simplification real or fictitious? This is the last slide, don't worry. Is it real or fictitious? When we go to our local bank, even to our local bank, the bank people want the financial statements, and they also want additional information in order to give us a loan, okay? So if we subtract information from the financial statements, have we really achieved the real simplification? As banks want the information anyway. Let me go on. How many categories of companies will we have after this? Many, more than we have now. And we will also have some individual companies which will, with international flavor, which will adopt the IFRS anyway, because they will be allowed to do it. So how many accounting models do we use in this country? tax issues. I told you about that already. And the problem of audit. The audit of small and medium-sized entities, provided that it's 99.5% of the total number of firms in this country. Is audit a service, or is it just a cost? Does it add value, or it just subtracts value in terms of audit fees from the little firms? And finally, it is true, I can state that the full IFRS are too complex for SMEs. However, I am sure, and I have examples among my clients, that pure Italian companies, but with an international vocation, even smaller ones, want to adopt the IFRS. So these are questions more than answers. Thank you very much.